Hello and welcome. You're watching NDTV Profit. Welcome to this very special edition of Muhurat Trading. Happy Diwali to all our viewers. Happy Diwali, Tamanna. Happy Diwali, Neeraj.
Happy Diwali.
And I stop at that.
Now, what an exciting sort of day we hope it will be. Markets have been in a bit of a sulk the last few days, but nevertheless, this is a great time to celebrate, look forward to the new, and really wish everyone prosperity.
Yes, most certainly, and which is what this day effectively marks, right? I mean, people don't buy today because they want to necessarily make trading gains today, because otherwise, typically, in a Muhurat trading session, the market comes off from the intraday highs. So that has never been the case, but it's more about coming out, marking the occasion, and buying the Shukan ke stocks or Shagun ke stocks. So you go out there and make a small bet today and hope that that bet pays off. It's just celebrating investing, and I think I mean, as much as we rue the holiday going away, but it's a nice feeling.
I just wish that with the start of Samvat 2081, the mood changes on the street. October's been tough.
Yes.
If you've been a bull, you've been pained. But hopefully, like we've seen in the last few years, the tide has turned post the Diwali Muhurat Trading Day. Last year was also a good one.
Yeah. It may not. I think a few key factors, of course, you have US elections coming. What happens in the Maharashtra elections could also be an important factor, and that's end of November. You're also starting an important month. So all of these factors will come into play. But I think more importantly, to the point that you were also making, Neeraj, that this is about, so the festival is about, celebrating and worshipping the goddess of wealth. And which is why, from the stock market's perspective, it becomes so important. And I've had the opportunity, as of all of us, to cover Muhurat trading for so many years. And if you actually go into the offices of brokers and trading rooms, there is a prayer for the Chopra, the accounting book. In the olden days, people used to, actually include their computers and all of the equipment in the prayer. So it's actually wishing for a great year ahead.
Yeah,
and blessings from the goddess of wealth.
Yeah, most certainly, and that is what this is about, really. So I mean, and the best part is that throughout the day today, the messages that you receive say that, oh, I'm going to invest into this on the Muhurat trading day. These are my Muhurat picks, etc. Or people talk about, acha, bhai, ek stock bata do, which I'm going to buy today for the next 1 year. It's never about, oh, I want to buy this today and sell it in the next 1 month. This is the beauty of today's session. It's just very special in more ways than one.
Yeah. Well, we also have our guests who are joining us, and of course, it's not about, like we said, just the day or just today or tomorrow, but this is Samvat 2081. The mood on the street has been slightly tough. Of course, the bulls have attempted a comeback this week, but unfortunately have failed up until yesterday. Today, though, could be a different start, and we are all hoping that this brings with it prosperity. Good luck to all our viewers. Andrew Holland, CEO of Avendus Capital Public Markets Alternate Strategies, joins in for a fundamental outlook to Samvat 2081. Hi, Andrew. Happy Diwali.
Happy Diwali to you and the team and all your viewers.
We're so excited to be talking to you today. Just to start the conversation, I know we've talked often in the last year or the last few months. How are you feeling this evening? Are you feeling optimistic? Are you feeling the new year is going to bring bulls, investors, lots of prosperity, happiness, joy, from a market's perspective?
Well, I certainly hope it does, but I'm not feeling that joy at the moment. The earnings season, which we talked about, up until the run up to the earnings season, has been dismal, and that's a conservative way of looking at it. Revenue growth is not really picking up, but the big key is the margins, and the margins are under pressure. So you've had this great run over the last few years, where both revenue and in particular margins were all expanding, and now you're seeing the opposite of that. So with valuations where you are, there's no room for slippage. And I'm not getting a good sense across the board, across most sectors, that things are going to really pick up in the second half of this year. So at best, I think earnings going into next year, at best I can see maybe 10% earnings growth, and that's probably where if the market was to move up from here, that's probably all I'd give it at the moment in terms of a potential rise. But there's so many headwinds out there. In terms of the U.S. elections, former President Trump gets in, what that means, and obviously the geopolitical situation. So, there's many factors out there which could also, from a global perspective, unnerve our markets. But I think in particular, the earnings season has been very poor.
Absolutely. Having said that, though, Andrew, I don't know if it's all gloom and doom to that extent. Kush Bora is joining us in the studios. Very happy Diwali to you, Kush. Great to see you here on the Muhurat Trading Special and to have you here. We're also joined by Rahul Arora this evening. Rahul, very happy Diwali to you. Just a mood check. It's a tough time in the market right now, but the other consensus seems to be that this is the kind of profit booking and a bit of correction that we needed, that we were waiting for.
Good evening, Tamanna. To you, Salina, Neeraj Bhai, and the entire team and all your families, wish you all a very happy Diwali and a very prosperous new year as we look ahead to the next 1 year. Yes, I think you're absolutely right, Tamanna. I think it was way overdue. I think you pretty much had a one-way rally from 7,500 to 26,500. More welcome, and I think prices are now starting to look a little more reasonable. I think the only disconcerting part, Tamanna, as Andrew was very rightly saying, is this has probably been the worst earnings season in a very, very long time. I think, so the move to that extent has been soured. I think people are going to be very surprised at the end of this earnings season with the extent of the downgrades that have come in. But I think at some level, we should be thankful that it has happened, because prices, like I said, had become very unreasonable to justify. But there is no need to dampen the mood. I think it's just a step back, and let's enjoy the moment.
I think, okay, that's a, okay, sounds of caution, and maybe that is also warranted, because you should effectively say it is for what it is. But Andrew, Kush, Rahul, thank you so much, all of you, for joining in, and happy Diwali from my end as well to all of you. Kush, do you reckon that the near term has challenges? Do the charts show that? Or would you use dips to buy tactically or for the positional trade?
So first up, a very happy Diwali. Just a quick question. Is this the last day we're going to be doing this traditional where...
Yeah, we're done now.
Oh, really? Back to the mundane Western outfits, is it?
But you can always come back on Monday also in your kurta, Kush. Nothing is stopping anyone.
No, but I think, ladies, you've saved the best for the last. Absolutely stunning you're looking. Neeraj, as usual, the gentleman that you are.
What does that mean again? As usual, the gentleman. What we can compliment
means
him.
he's not stunning.
I think,
yeah, that's so mean.
I think he takes being a gentleman as the biggest compliment.
Inner beauty types, huh?
Anyway, it's difficult to beat the two of them today. So let's just go ahead. Yeah.
So, as much as I want to sound off, like a very optimistic tone here, I think I'll have to concur with the other two guests here. You could perhaps buy on declines, and if you're really doing that, it's not a bad idea. See, we were all talking about the dip, when it'll come about, and we always talk about the buy on dips, strategy. This is where you start accumulating, but I don't think we've seen the end of it. Now, if I have to put any kind of a positive tone to it, like I mentioned yesterday in the closing show, is that, or rather the opening show, is that just look at this as the sale that you're getting in the markets. I know a lot of us would have expected or wanted it to be on the higher side, but let's just expect or count this as the much needed sale that we were looking for in the market, and you're getting to buy a whole lot of stocks cheaper. But I think from a near-term perspective, this pain could continue on the Nifty. We've had 2 days of consolidation at best. And beyond that, the markets have actually been correcting, and on the back of fairly decent volumes. Even the rise on a lot of stocks hasn't really been as volume backed. So I think there's some more downside left. Yesterday I put a number to it, which is 22,500. That's a meaningful support zone. If the markets were to slide, you could see Nifty head to that level. But even if that's not the case, you could perhaps consolidate with some negative bias for the course of at least a few weeks or month or two, perhaps.
I think another 7-8% correction from here cannot be ruled out on the
What
index.
surprises me is the tone, or rather the idea of this question, because when we were going up, we had the same surprise on the way up. Why not on the way down?
You're right.
Not that I'm gunning for it, but it could well happen. We've not seen a meaningful correction in the last 4 years.
Yeah, Rahul, you want to come in on this one? At the start of this week, I still remember on Monday, when it felt like there was some buying coming in, technical analysts would believe that was a dead cat bounce. But there were a few analysts, fundamental analysts too, who believed that, maybe now is a good time, we're done with the correction, back in business, time to go out and shop. Seemed a little far-fetched, to be honest, to me on Monday. And I feel like even now as we look at it, do you feel better opportunity to buy will come, or is it time to start allocating incremental capital in this market?
So I think, Samina, the right way to look at it is what kind of realistic return expectations you can expect from the headline index over the next 1 year. And I think that's probably, going to be the key determinant of any investment decision that you make when you compare it to other asset classes like fixed deposits, real estate, gold, etc. My sense is that we are at a pivot point around 24,000 on the Nifty. And none of us have seen a boring market for a very long time. My sense is the next 1 year could be very boring. I think you could probably land up in a slightly longish range of 22 to 26,000 on the Nifty, which is why I said you're pretty much at a pivot point at 24. As Andrew was rightly highlighting earlier, there's a very important global event next week in terms of the US elections. But I go back to the earlier point I was making, Samina. I think the most disconcerting part has been the earnings season this time. And I think, we still have 15 days of results left. We don't know how bad it's going to be from here on because there are not too many green shoots emerging. In India, inflation itself, it remains a big question mark. Do we even need to cut rates? I think, people were anticipating a rate cut by October, but it doesn't look like it's going to happen this calendar year, let alone this fiscal year. So I think it's going to be a very boring market. It's going to be a very stock-specific market. Yes, there is certainly some pockets where value has started emerging, no question. But I think to be expecting anything more than a 10 to 15% return over the next 1 year in this earnings backdrop is highly unrealistic, in my opinion.
Andrew, what can change this? I mean, 2 months, we have a quarter which is bad. Some optimists argue that the government spending hasn't happened and that has had an impact. Once the government spending comes back, and people believe it will, there will be a bit of a recovery. So maybe Q3 also is a bit of a quiet one, but then things may turn around because we're still a growth economy and a growing economy. So what turns this around? Is it a correction to maybe 24 or 23,500 or 23,000, or is it something else?
So Niraj, it's an easy one to answer in the respect of that. I'm not sure what can turn the market around, and I'll tell you for why. Is that all the factors, and Rahul mentioned them as well. Is that we're all expecting interest rates to come down. That doesn't look as though it's going to happen now. I mean, I've been the most optimistic on this, and I just don't see it happening in the next quarter. So there's no respite for the banks, and that's one of your biggest kind of weightages in the index. So there's going to be no earnings upgrades, no thinking about earnings upgrades for the banking sector. If former President Trump gets in, then there's going to be huge worries about the tariffs that could possibly come into the IT sector and pharmaceutical as well. So 2 places to hide have just disappeared, and your third, the banking sector. So 5% from here downwards is an easy thing to think of. And then unless the government does start spending, which is going to be probably very late on in the year, there's no multiplier effect. It all comes into 2025, and the world could be looking a lot different than then. China is looking more resilient now after the stimulus packages. There's more to come. So I don't see FIIs rushing to India, even though you've seen some fall in the market. It's just not big enough to get that valuation to such a point where you say, yeah, this market's good and it's cheap and we know earnings are going to pick up. So I'm not sure there's anything in the very short term, Niraj, which can turn the sentiment around.
First, pre-open rates hitting for the Diwali Muhurat trading session in another 30 seconds. They are not going to have great volumes. I mean, volumes have been petering off for the last week or so. Even if you look at the FII flows from yesterday, still about 5,000 odd crores of sales, 3,000 odd crores of buys from DIIs. That remains consistent, and you could probably see that in the next few weeks as well. But the biggest question really is that what is the kind of position you need to take in the market right now? And Kush, let me come to that. Will we be looking back at this period in another 2 to 3 weeks and some people thinking that I missed the bus?
So if we expand the time horizon to, let's say, perhaps 4 to 6 months, that's my sense right now, then my answer would be yes. Given the kind of ferocity with which we've been selling, and we've not seen that abate at all. Maybe we can argue that yes, the FII selling number has gone down from what it was at the start of the month and all that. But let's not forget there was the monthly expiry also at play. So those technical factors also come in. So I'd want to see up until the US elections are over, maybe a couple of days thereafter, how do things shape up? So not 2 weeks, perhaps 2 to 3 weeks, might maybe a little longer. Then yes, this is perhaps one step where you could at least start buying whatever you wanted to. Now, a couple of stocks that have been on my radar. I know we've discussed them a couple of times already. One of them is Skipper India. Phenomenal run over the last 2.5 years. It's been a multi-bagger from 50 to 500 plus kind of levels. Hasn't really seen a meaningful correction. Earlier, it wasn't really a stock which had all that great participation in volume, but on the way up, post that 300, 350 mark, the volume has also gone up. So I think this momentum could continue. From a somewhat to somewhat perspective also, for a year's perspective also, you could keep Skipper on your radar. But from a near-term perspective as well, the stock's not broken its 20-day moving average. And I've been talking about the comeback of, or the sort of comeback of, the railway stocks now, because the volumes on the way down are thinning. And we've already seen some traction in a couple of names. So RVNL is one stock that I have on my radar from, again, a year's perspective, but from a near-term trading bounce perspective also. So Skipper and RVNL are two stocks that I'll keep on my radar.
So you'd buy Skipper today in 15 minutes? Muhurat trade would be of the day would be Skipper?
Oh yes, the Muhurat trading pick for today would be Skipper. Yeah.
Okay, that's great. And talking about Muhurat trading picks, Mika is standing by with those cracker stocks. Mika, you've spoken to a bunch of market analysts, fund managers, and you've consolidated a list of cracker stocks, like we're calling it. You want to bring some cheer to the street and tell our viewers what they should buy today?
Happy Diwali, Samina. First of all, yes, we spoke to multiple market experts, and I'll start with Vijay Chopra, and let's start with the sectors that he's bullish on. One is metals. Now, this is a sector that has been seeing some green shoots due to China's latest stimulus package. The second one is defense, a theme that has not done very well this year because of valuation concerns, but still one that Vijay Chopra believes that one could bet on. The next one is IT, with macros of the sector seeing improvement. The US Fed rate cut helps, and we've seen deal wins coming by. And the fourth one is luxury products. Now, when you talk about the top stocks to bet on, well, according to Vijay Chopra, well, first one is Hindustan Zinc, which is the world's second largest integrated zinc producer and also the fifth largest silver producer globally. We also have Hindustan Aeronautics, not done very well this month, but the stock is still up 50% year to date. Then is DLF, which is a real estate developer with around 180 projects developed and projects worth 41,000 crore plan for FY25 itself. We then go to Devin Choksi's view on the top stocks to bet on. We have Tata Tech, we have Bajaj Housing Finance, and we have Jio Finance. Interestingly, all these stocks have corrected 8 to 12% in the past month itself. And lastly, we have Amisha Vora's views in the top stocks you should bet on. One is Divi's Labs. It's a manufacturer and exporter of APIs, intermediaries, and nutrachemical ingredients. The second one is Trend. It's seen a great run this year, up almost 3x in the past 1 year, and its multi-format model is proving to work for the company. The fourth one is Tech Mahindra. Well, the stock is up over 27% in the last 6 months. The company also posted a good set of Q2 results with profits growing 45% and beating estimates. And the last one is HDFC AMC. A counter data is up 33% year to date.
Okay, thanks Mika, thanks for that. Well, a clutch of ideas out there to watch out for from amongst our guests who've joined us in the recent past. Rahul, I'd like to come to you. What is it that in this cautious stance that you have right now, and arguably correctly so, what is it that you find favor with as a house? Where is it that you guys have told people to go out and make investment calls, not necessarily from a somewhat to somewhat perspective though?
So I think, Neeraj, it's very bottom up. I don't think there's a top-down sector call, across the board. Let me throw some names at you, maybe for the benefit of your viewers. I think if you look at IT services, Neeraj, valuations are getting a bit on the higher side. I think large cap names have approached about 30 times. But there, I think if you look at a name like LTIM, looks interesting to us from a growth and a margin expansion standpoint. If you look at BFSI, Neeraj, I think there is a lot of value that is still there in some of these housing finance names. So names like PNB Housing, Repco, Housing Urban Development Corporation, not names that we often discuss, but I think some value is emerging there. We've seen the insurance companies report very good numbers. So, you could still look at something like an ICICI Pru Life Insurance. I think in chemicals as well, Neeraj, I think there is some value emerging. We like the oleochemical space, so you could look at names like Galaxy Surfactants and Fine Organics. I think even Naveen Fluorine's had an interesting correction. You've had a bit of a correction in durables and electricals as well. Names like Crompton Consumer, Blue Star are starting to look a little interesting at these prices. Cement has been a washout quarter, Neeraj. A lot of the mid and small cap names have reported losses, but I think we could start nibbling into something like a JK Lakshmi Cement. I think defense, your colleague was talking about, some of a correction because of valuations. We had downgraded the sector some time back. I still don't think valuations are reasonable yet. But I think some names like Hindustan Aeronautics and DEML. So I think, I'm giving you about 10, 12 ideas. You could probably look at some of these. So the point being here, Neeraj, it's very stock specific. I don't think we can take an aggregate sort of top-down view per se. But I just like to briefly comment on, another sector that your colleague recently raised, which was luxury. That sector is showing no signs of slowing down. So, we do like names in consumer discretionary as well, like a Chalet Hotels from the hotel space, United Spirits and Westlife from the QSR space. So some of these, unfortunately, okay, Neeraj, let me give you a line that I actually heard recently from a global investor. And this is just stuck in my mind and it doesn't go away. He says that a 50p stock with growth is actually cheaper than a 15p stock without growth. And I think that's what's happening with a lot of consumer discretionary stocks that we're seeing right now. So I've given you about 12 or 15 names, but I think these are some of the stocks that are looking interesting, where we're confident of top line margin and bottom line growth, and valuations are not excessive, but it has to be bottom up on a case to case basis. I think it's very difficult to take an absolute sector top down view right now, Neeraj.
Guys, look at a 50p stock with growth as opposed to a 15p stock without growth. That might actually reward you more. We've seen this play out in the past in India as well, right? Yeah. Asian Paints in the past, or some of the other expensive stocks which have done really well because they were showing growth. Maybe, maybe not.
And I think when you go into a tough market environment where quality stands, it might be a safer place to be, right? And if you are investing for the long term, that story still remains.
Or maybe the EMS players, etc., give you that idea, right? That they are high growth stocks, so high PE, but people are still buying them.
But the last couple of days, couple of sessions, if you've noticed, broader markets have been doing fairly okay, especially micro cap, small cap. So there are those pockets of growth. Maybe it's not only the big bets, but we have such a wide expanse of coverage lined up for you today. We have Agam Vakil at BSE. He's going to be speaking to all the market biggies there, a lot of buzz there at BSE. Harsh is joining us from NSE, where, we will also see all of the festivities. And this is an exciting time when exchanges actually come out and have a celebration. So we'd love to see some of those pictures from you guys in a bit. But meanwhile, Puneet is also with us, who's getting us the dealing room buzz from HDFC Securities. Puneet, for everyone who works in and around the markets, the only downer is that Diwali is working, but the mood is always positive. And especially for a sector that you track closely, auto numbers are not half bad.
Well, definitely, the sector was very buzzing today. We have seen some of the biggest gainers in this particular type, some Mahindra & Mahindra, Escorts reporting really strong numbers as well in this particular month. Apart from that, Eicher Motor has been another one that's very positive, crossing 1 lakh bikes in a particular month, the first time since the pandemic. So a lot of gainers. Maruti's also crossed 2 lakhs in this particular month. And, to get more flavor of, we are coming to you live firstly from the HDFC Securities dealing room. And to get more perspective on the sectors and the market and the stocks that you should be, going forward and looking to in the next Samvat, we're joined by Mr. Deepak Jasani as well, who's the head of HDFC Securities Retail Products. Hello, sir. Thank you so much for joining us today. Wish you a very happy Diwali as well. I want to start with, for asking you the first question on, how the market has been in this particular time. We've seen a really strong Nifty returns, 23% year to date. Talk to us how this festival season has been from a, from a securities perspective. What is the kind of interest that you're seeing from retail investors, and what are some of the, I'll come to the picks in a bit, but talk to us about what's been the response to the retail investors in this particular time frame.
Yeah, at the outset, let me wish Happy Diwali and New Year to all your viewers and everybody at the team of NDTV Profit. I think we have had a great year so far. Retailers have made good money. They have encashed some money. They are sitting on good profits on an MTM basis. As you said, Nifty is up some 23-24%. Mid caps and small caps are up even more, between 33 to 40% in terms of index. And in terms of specific stocks, the gain is even more. So the broking industry, the dealers, the mood is very ebullient. People are generally happy. There is some disappointment in terms of the correction that we have seen since end of September. But people generally are hopeful that the concern areas will get sorted soon, and we will see another uprun in the markets, although not at the same pace that we have seen in the last year.
So what are some of the themes and the sectors that you are most positive on going forward into the next Samvat?
So at the moment, I think we are positive on BFSI as a sector. We like IT from a tactical perspective. We are positive on small companies in the defense electronics, in the capital goods space. We like mining stocks. So broadly, these are a few sectors or themes where we are positive for the time being.
And going into the next Samvat, give us the top 3 stocks that you are most bullish on going into the next year, as well as, from some of the sectors that you mentioned as well.
Yeah, so we have come out with a Diwali pick report consisting of 10 stocks. Out of that, I think we can talk about 3 stocks. We like SBI. It's a well-known stock. The largest and the oldest bank, has adequate deposits, has a good credit growth. Asset quality remains maintained. Technological advancements over the last few years have been very good. So that is one stock we like. The other stock we like is Jyoti Labs. It's in the FMCG space. It has moved up from one brand and Southern Territory to now multiple brands in the fabric whitener, detergents, insect repellents and such like, and now present all over India. And the third one we like is National Aluminium. Now this is the one of the lowest cost producer of bauxite and alumina in the world. Its capacity is going to increase by about 32% in the coming year. So these are the 3 stocks which we like out of the 10. We like almost all the 10, but we can speak only about a few at this point.
All right, so that was the dealing room buzz. We'll come just in a couple of minutes to Agam and Harsh to show you all the action from the exchanges. But meanwhile, Andrew with us, Rahul with us. Quick word before we let you go. And Andrew, I'll come to you first. Obviously, happy Diwali as always. And you sounded cautious, understandably, at the start of our conversation here today. But what is the one or two, or what are the 1 or 2 ideas that you think are worth looking at very, very closely right now, even as these concerns mount over consumption, etc.?
So I think, Samantha, it's the same themes. I'm not moving away from the themes that we like, which is the premiumization in the alcohol and non-alcohol businesses, hospitality through airlines and hotels as experiences increase. Defense and renewables remain a long-term story, and electronic manufacturing sector. So those are the things that aren't going to play away. I just feel that the next 2 months, sitting on a bit of cash, because it's going to be more of a trading market, in my view, where you're going to get whipsawed around quite a bit. It's just probably a nice, safe place to be and just let the dust settle over a number of events which are coming. It's not just the US elections. We've got the Federal Reserve as well in a week or so's time. And of course, then we'll have the RBI and whatever sanctions or whatever regulations they're going to put onto the industry. So I think those are the 3 things which kind of worry me in the very short term. So yes, the things will play out over a longer period, but I don't need to rush in. I can continue to pick my stocks within those sectors as the market kind of takes that broad brush and hits the whole of the markets in the next 2-3 weeks.
Now, very, very happy Diwali to you. Have a pleasant evening and, of course, a great year ahead. There's still time to come. Andrew of the opinion that there will be better buying opportunities. While, of course, prices look compelling for some parts of the market, Andrew's of the opinion that the markets ahead could remain in a volatile phase and probably go through a time correction over the next couple of months. It's getting to 6 o'clock, 2 seconds from now, we should get the early ticks on the street. Moderate trading opening. The Nifty, remember, saw some pressure yesterday. it's opened okay. I think 24,300 is where we've opened up today's trade at, largely in line with what you'd have expected on any moderate trading day. Bank Nifty is also doing okay in trade, 0.3% higher. Remember, Bank Nifty is up significantly, and Nifty itself from last Samvat to this Samvat has created significant wealth. It's up 28%. So while the mood might be somber last few days, the fact remains that every portfolio from a 1-year return perspective has done exceptionally well. The Sensex trades flat, 0.5% higher. This is largely what we were expecting, right? A quick check on how the broader markets are doing, because remember, the mid-cap space has gone into a correction phase, but has also at the same time recovered slightly more than the benchmark in the last couple of days of trade, 0.8% on the Nifty mid-cap. Small cap, micro cap also seeing marginal gains in early morning trade. Early evening trade. Neeraj, top Nifty 50, you want to just take our viewers through that as well?
Yeah, broadly for whatever it's worth, some advances more than declines, which is a good thing. Very quickly, let's just get the heat map up on the screen. And M&M, Eicher out there, Tata Motors, Maruti. So autos certainly packing a punch. More gainers than losers. Sun Pharma, the only loser, if you will, we're talking about. But let's hold on to our horses. Some of these might be getting bought right now. Let's see if they last the test of the next 59 minutes of trade.
Yeah, I think auto is going to be in focus, not just today, but on Monday as well, because that is one sector which has been beaten down so badly that any silver lining in terms of the numbers will be perhaps bought into. The other set of stocks that I'm seeing some action in is definitely real estate. Brigade Enterprises. Look at Brigade this evening, 7% up. You have a whole host of them. Signature Global was also looking pretty decent. You have Vodafone, which is doing well. Poly Medicure, I know that's a stock on Kush's radar, about 3% up. Kalpataru Projects, it's anyway doing well after its results. That also has seen a bit of buzz today. But yeah, Brigade Enterprises, one of the top gainers that we've seen. All right, we have CK Narayan joining us, founder, Neo Trader. A very, very happy Diwali to you, CK. And I'm so glad that you could join us here on NDTV Profit. Great to have you here. I mean, what is the outlook looking like for the Samvat? We're in a tough spot right now. How soon do you see that tide turning?
Good evening and happy Diwali to everybody, all our listeners, viewers, etc., and to every one of you out there. Well, we had a very, very good year, coming into this Diwali, if you leave aside the last 1 month. And that has, of course, built in a lot of hope and expectations for the next year also. Now, I don't think those hopes are really out of place because of the extraordinary gains that we have had during 2024. If you look at what happened across the year, this is the first month where we have been having some sort of a negative setup in trading. Otherwise, the first five months were spent doing almost virtually nothing because the market was waiting for the elections to get over. Then we had that severe drop which got curtailed within a single day in June early. I think that accounted for a decent amount of correction which had not happened earlier. But the recovery from that was so swift that it did not really look like a correction. But this one has lasted a whole month. So I think the pain associated with that has been a lot more severe. And this one looks like a correction, and that is why you're having some bit of nervousness around it. But I would think with the way the market is positioned right now, there is absolutely no changes associated with the fundamentals which are associated with India. So I don't think there is any problem that we should envisage ahead. Number two, I think the fund flow towards the market remains as consistent as ever. Number three, I think the momentum in the market may be a little bit pulled up in the month of October, but it's far from tripped up, so to speak. So I think with the momentum in place, the fund flow in place, the fundamentals in place, I don't think we have too much to worry about. Yes, Q2 results were not so palatable. So I think people are a little bit nervous because of that. So I think that is one of the reasons for the pullback, and this might keep the markets a little bit in check for, let's say, another quarter or more. So I would say till the new year, the markets may not really pick up too much steam, and
but no cause for major bearishness. I think that's the point you're making, Dr. Narayan. It is good to know that, because we've heard somber voices all through the last half an hour. It's good to hear a positive view as well. But I did hear you say that you don't foresee any major pickup until the new year. So what does the last quarter do, Dr. Narayan? The next 2 months, brace for downsides or sideways market? And what do you buy or sell in a scenario like this? Are there sectors that you're looking at?
Well, I think, we have dropped down to the strong base of support near 23,900, 24,000. If you take the high-low for the year, this is the kind of average level around 23,900. So I don't see too much of the downside, but I don't see too much of the upside either immediately. So I think in the next month, maybe 24,750, and for the time being, I'm looking at a max of about 25,000. So a limited amount of bounce and churning around is what I'm looking at for the next 2 months. Some extraordinary event has to happen for us to surge upwards. As far as sectors are concerned, I think it's going to be a little bit all over the place, because the results have not been very, very good, at least whatever has come out so far. And I think that will dim the prospects for any strong rallies to come up in the coming month or two. So I would say that whatever set of stocks or sectors that get tailwind out of the current set of results, and whatever results are expected for the next quarter also, it would be pretty much stock specific rather than sector driven kind of approach for the next couple of months.
On the downside, 25,000 is where those gains could be capped, and this is Dr. Narayan's outlook on the index between now and the end of the calendar year. He does believe that the upside journey will resume at the start of next year. A quick mention on Narayan Rudhalia. They reported numbers yesterday, and the stock is one of your top losers on the Nifty 500. Numbers were disappointing. Profits have fallen about 12%. If you can just show the intraday chart on Narayan Rudhalia, that should be helpful. Revenues are up 7%, EBITDA has increased, as margins have also dropped significantly. So that stock is seeing some pressure in early trade. Nifty 500 started off with a marginal gain. It's now up 0.8%. So as we go into the hour of moderate trading, it's actually getting slightly better than where we started a few minutes ago. The Nifty 500 as well, up 127 points now. So you've got 0.5% odd on the index, pretty much at the day's high point on the Nifty as well. Barring 4 stocks only on the Nifty 50, 46 counters are trading in positive territory. But we've got Agam now, who's joining us from the BSE. Agam, you are where all the action is. What is the mood like? Everybody's feeling optimistic? Is it somber? What are people telling you? How do you feel? Yeah, picking up on all that energy around there.
At the oldest stock exchange in Asia, we celebrate.
Well, right. I've been standing in the center of one of the world's oldest stock exchanges, and it's always been a privilege. I've been doing this for 15 years, and the mood here is no different than any other year, where we have families flock towards the center, attend the puja, and eventually what you see is that they head towards the terminal and place their Muhurat trading bets. What the only difference that I have seen, of course, is that a lot of kids back then have all grown up. That also makes me feel old. But all these kids now are not only talking about principles in terms of investing, but what has also changed is the adoption of newer technologies. We now have more and more adoption of going back to using computers for your basic research, and after that you have your decision making coming through. That is the kind of conversation I'm having with a lot of these people, and truth be told, even some of the veterans are actually in on it. Of course, they also are doing very well in terms terms of adapting to some of these newer technologies, so they don't want to fall behind. In general, the mood is not somber. In fact, it is very joyous. And yes, well, I'm looking at families very excitingly punching orders right now towards my right, as has always been the case.
That's just fantastic. Enjoy all the mithai and the fun at the Bombay Stock Exchange. All the buzz there, as it is in the National Stock Exchange as well. Harsh is joining us live from there. A fun mood, a celebratory mood at the exchanges, Harsh?
Well, absolutely, Tamanna. It's a buzzy mood here. Not only are we celebrating Diwali and the puja, etc., but we're also celebrating 30 years for the NSE. So it's a double celebration which is happening. Of course, conversations around whether FII flows, which have been muted over the last year, will reverse, whether the retail investor has gotten more mature, whether a better technology stack is required, just given the kind of retail investor interest that we are seeing, as well as how retail investors may react in case of a correction, and whether they are now a more matured set, are just some of the many conversations I've had with people over here. But it's been an extremely interesting afternoon and evening, and of course filled with celebrations here.
Oh, well, that's exciting to hear. Harsh, of course, will keep coming back to you, but happy Diwali. And I'm guessing it's you're part of all the action and feeling the energy and the vibe around you. But like Agam as well said, it's anything but somber. Investors are excited about what lies ahead. And of course, the idea really today is setting the tone for next year in many ways. But Kush, I mean, we'll still talk stocks because it's exciting. Bank Nifty, how is that looking? It's not done too badly, somewhat to somewhat. And this morning is, this evening, I need to keep correcting myself, this evening as well.
India market
evening. Yeah, India market evening. It's trading with a slight positive bias. You think for November series, Bank Nifty becomes a good long trade? And I'm giving you 1 month, so not...
So I think first up, a year's practice of, morning and afternoon. I think, no one's used to evening. I think even the viewers will perhaps, let that one fly. Yeah, absolutely. See, I'm very constructive on Bank Nifty. I think Neeraj and I, we were having that conversation yesterday on air where, he was mentioning about the Bank Nifty being perhaps a little negative and not just, one way up. But if you compare it to Nifty, the Bank Nifty has actually been in a very broad 2,000 point range where 50,300 on the downside and 52,500 or 52,300 on the upside has been the range. And it's been very volatile on days, within that range. But for that consolidation move, when the rest of the markets or Nifty in particular is perhaps, correcting, I think I'll take this. So as long as this support zone of 50,300, 50,000 broadly speaking is maintained, I think Bank Nifty is one index that you can consider going long on. Now, something that even Rahul mentioned a while back, if I have to talk about a sector, I'm fairly bullish on BFSI, but even within that, not all banks are really doing all that great, right? But as long as your likes of HDFC, ICICI, and SBI, in fact, we need just one of those, not even all three. But if, as long as those three are doing well, I think Bank Nifty will be, held in good stead. So from a month's perspective, I think Bank Nifty is a good long trade. It's a deep kind of a stop loss where 50,000 is the support zone that you're looking at. But on the way up, it could well be 52,500, 53,000 that it could, very well test. Even if Nifty continues to consolidate with any kind of, like a sideways bias, maybe even mildly negative.
Okay, Gautam Shah is joining us on this Diwali Muhurat coverage. Very, very happy Diwali to you. So is Mayuresh Joshi. Happy Diwali to all of you, and of course from the entire NDTV Profit family to all of your families as well. Gautam, great to have you here. Let me start by, sort of getting your sense on what would be your top Diwali picks for the Samvat coming ahead, and how soon do you think the mood is going to change? I'm not even asking people if it's going to change, I'm asking them by when.
Hi, good evening, and thanks for having me. I wish the entire wonderful team at NDTV Profit a very happy Diwali, and to all your viewers as well. If you look at the last 20-25 years, the period of Diwali has this uncanny ability to trigger market bottoms and market tops. I think we've seen this multiple times in the past. We've sort of seen a mini bear market in the last 4 weeks. If you look at the headline indices, you might say that it's not such a deep cut. But if you ask anybody on the street, and if you really look at the broader data, it's really been quite ugly. But as we stand today, and if you really look at the breadth data and the technical studies, I do believe that we might be close to a bottom. And I think this is a shakeout that we actually needed. And it's a wonderful platform for the markets to start building up on the bull market again. I do believe that we could be very, very close to that. Maybe as we get into the month of November, we are already there. But as we get into next week, I think the action is going to be a lot more constructive. So I wouldn't be too negative. I don't think the indices are running away anywhere. 24,000 sort of could be a base, 26,000 could be a sort of a ceiling, and we might just oscillate within this range for many months to come. But this is going to be a very stock specific market, like what happened in the first half of this year, where the Nifty was in a sort of a range. And I think over the next 1 year, financial services could be the real key theme. I think valuation wise, it's reasonable. Technically, I think it's very well placed. We love the way some of the top stocks are placed. We like the way HDFC Bank is shaping up, SBI is shaping up, ICICI Bank, Bajaj Finance. So I do believe that Bank Nifty could potentially be the trade from this Diwali to next Diwali.
Nifty, Gautam, if you bought the Nifty at 24,200, 24,300, or let's go with 24,400 because that's pretty much what it might give us in the next few days. Long for the November series, you think, Gautam? Happy Diwali, of course.
Yeah, thank you. And yes, long for November series. I think October, we've already seen a 2,000 point fall. Just to share a statistic with you, on an important day, just 18% of the stocks on the NSE 500 are trading above the 50-day moving average. Historically, in the last 4 years, whenever you've reached such numbers, the markets have always found stability and a bottom. And if you look at the last 3 or 4 days, the screen has started to look constructive because we've handled geopolitics really well. We've handled earnings really well. We've handled the FI selling really well. Who would have imagined that you would get 85,000 crores of sales and the market would have lost 8% from the top? So I think look at the positive side of things, and it clearly tells you that the month of November should be constructive, and that's what the charts are saying. It's not a bias that I have, and I do believe that the market will be range bound, but then stocks and sectors, whether it's pharma, whether it's metals, IT and banks, these are the 4 pockets which I think will stand out.
Go to Mayuresh though. Gautam, I just want to ask you a follow-up on the first point that you mentioned, because everybody is now saying financials is the thing. What banks would you bet on? Would you bet on ICICI, HDFC, maybe Kotak or that? Or stocks like IndusInd, which are giving a bit of a corrective move and maybe better valuations? Or would you go for PSU banks? What is it that you like within banking? Because you're calling that as the key leader for the next Samvat.
I believe for the longest time that the Bank Nifty is a stock. It's just not an index, because just a few stocks in the Bank Nifty lead to a big move either on the way up or on the way down. And the beauty is, in the Bank Nifty, you have certain names which are near 52-week lows, and you can talk about IndusInd Bank, and there are certain names, you can say HDFC Bank, which are actually near 52-week highs. I want to stay with the winners, and I do believe that over the next 1 year, you will see an HDFC Bank move towards a level of 2,000. I do believe a stock like SBI will move towards a level of 1,000, and I do believe that ICICI Bank as a stock will be one of the bigger outperformers. So I'm still staying with the 3 big names. I don't want to go lower down. I don't want to be in the Kotaks and the IndusInd Banks and the Axis and the RBLs of the world. I think the top 3 will deliver almost mid-cap returns if you have to take a 1-year view.
Mayuresh, do you reckon the large caps can give mid-cap returns fundamentally? Gautam is, of course, quite convinced about his opinion, and a lot of people have actually spoken about this. Are you constructive banks here, Mayuresh? Happy Diwali to you.
Evening, Neeraj. A very happy Diwali to you, all the viewers of NDTV Profit, and everyone at NDTV Profit behind the scenes as well. So I think we remain constructive, because I think a lot of expectations as far as earnings were concerned were a tad bit on the downside. But I think a lot of banks are probably surprised in terms of the earnings delivery. And therefore, I think a large part of the market expectation is now of the belief that the compression in NIMs might not be that harsh, even as we head into the next few quarters. Obviously, I think the kind of alternate sources that they probably might need to look at in terms of their borrowing needs to be a little more diverse as we head into the next few quarters, and a scenario where you are going to see a rate cut cycle in the Indian context as well. So to that extent, yes, banks, both from a valuation perspective and a price action perspective, look attractively placed. ICICI Axis, as I've time and again mentioned, remain our holdings in the large cap banks as far as our global portfolios are concerned. Within the mid cap names, Karur Vysya Bank, Neeraj, has given an excellent set of numbers. The commentary is very, very positive and supportive, and the management is of the belief that numbers will in fact show more improvement as we head into the next few quarters. And they've got a granular balance sheet, both in terms of their liability and their asset mix as well. So I think one of the picks from markets with India as far as the mid-cap base is concerned is Karur Vysya.
Yeah, Mayurish, it's so good to hear you sounding optimistic and constructive. I think you and Gautam both seem to be on the bull side. But happy Diwali. I'm hoping this is a good one for you. The market's, of course, doing okay. The Nifty is holding up, at least for now. 24327 on the Nifty is what we have. But Varsha is standing by, and she's got a whole bunch of Shagun stocks. The big bets the brokerages are making this festive season. Varsha, happy Diwali. Tell us what the brokerage is like.
Well, happy Diwali, Samina. Let's start. I'll speak about 4 stocks by 4 different brokerages. Let's start with HDFC Securities, which has NCC on its list. So the target price has been given at 363 rupees. Now the key triggers that they have mentioned is, one is the diversified order book of rupees 52,000 crore as of June 24, and management aims to add around 20,000 to 22,000 crore orders in FY25. The next on the list is JSW Energy by Aditya Birla Capital. Target price at rupees 900. The key triggers include operational capacity of 3.5 gigawatt thermal generation and 3.8 gigawatt renewable generation, and they aim to achieve 20 gigawatt generation capacity and 40 gigawatt energy storage capacity by 2030. Then we have Gravita India by Axis Securities, wherein target price is at rupees 3,000, and the key triggers include robust volume growth that the company has been giving, and they'll actually benefit from favorable industry dynamics and rising demand for sustainable solution, and they are anticipating a strong EBITDA growth as well. And lastly on my list is Titan by Motilal Oswal, wherein the key triggers include strong competitive positioning, and the tonnage, unique brand recall and business moat will provide solid edge for the company, and they plan to open 40 to 50 tonnage stores, and they plan to open 70 to 80 Mia and Carrot Line stores. So these are the stocks on my list.
Fantastic, Varsha. Thank you. Thank you for taking us through everything that much of those brokerages like. I just want to quickly take a check of Vari Energies. If you can get that on the screen and see what's happening. This has been quite a sensation since its listing. It's up significantly when the markets themselves have not been creating too much in terms of positive news flow. Up 6%. Mayuresh, you want to comment on this one? We've all talked aggressively. Okay, I believe Gautam and Kush on the... Gautam, this is a tough one. Technically, to talk to me about Vari might be almost impossible, right? Premier and Vari both are new listings, so not too much data to back, no?
Yeah, not much data to really put out a proper comment.
Okay, right, no problem. Just a few more stocks that I want to ask you about. And they seem to be coming in from a space which you've called, Rahul Dravid, to me. And I'm talking about ITC. So let's expand that conversation, because defensives have also done quite badly in the month of October. ITC, HUL, Tata Consumer, Marico, Nestle. Earnings have been a bit mixed bag, but the stocks are being painted by the same brush. So what is it, or would you go long on an ITC and HUL at these levels?
ITC, definitely yes. I think we've been playing this story for the last 3 years now. I think right from levels of 170, 180, when it was, talked a lot about. And thereafter, we had that mega trend from 200 to about 500, 550. Some correction in the recent past. I know it's a little large, but I do believe that in today's market, at such valuation levels for the entire market, ITC and SBI are 2 stocks where you really cannot go wrong. So at levels of 470, 480, I think we've been recommending this idea from a longer term perspective. And I do believe that over the next 1 year, this is one of the fewer index stocks that can deliver 25% upside and possibly move towards a level of 600. I mean, there is just too much happening with ITC. The structure is great. The charts are in great shape. The earnings visibility is there. And I think in today's world where there are so many stocks which are sold based on narratives and story, I think just earnings itself and valuation itself puts a strong case for a buy on ITC at these prices.
So ITC, one of those bets. Just one more sector that I really want to mark and is looking exciting. I think even over and above the good mood, which dictates a lot of the kind of flow you see in a session like this, which is auto sectors. Just look at some of those auto stocks. Look at the index, the Nifty auto, M&M, Exide, doing fairly well and most beaten down. I'm keen to ask Kush and Gautam about the top auto picks, but that's after a very short break. As we go into that break, here are some of the top sectors that you should bet on. Here's what Nilesh Shah of Kotak Mahindra AMC and Ridham Desai of Morgan Stanley are saying. Listen.
The large private banks are going to have a stellar Samvat.
Okay.
The regulatory environment favors them. The interest rate environment is slightly negative for them, assuming that the RBI cuts. But credit costs remain low, and I think they're all sitting on pretty decent growth rates going into the next 24, 36 months, and the valuations are very attractive. So large private sector banks. Conversely, you want to avoid the mid-sized banks. Okay, so that's in your banking bucket. I think in the consumer bucket, the luxury end of the market will see a major revival. So it's gone through a bit of a soft patch. I think that will be behind us in the next 2-3 months.
Why so?
I think the fact is that a lot of consumption got front-ended coming out of COVID, and it took a few months for that to level off. But many areas of the consumer market, I think, are now looking like inventories have adjusted, and therefore primary sales will improve. Secondary sales had not got affected as much as primary sales because a lot of inventory went into the system. A lot of companies erred in assuming that the post-COVID demand was a secular demand, but it wasn't. And we have also made those mistakes, and as a consequence, inventory went up, and now I think it's moderated, and those will improve. I think there is clearly, and it's been there for months now, so it's not today's story, a rural recovery. Terms of trade in rural India are the best that we have seen in 12-13 years. Okay? Yeah. So I think rural will surprise to the upside. So that's your consumption. The flip side is be careful about sectors where there is a lot of competition. Okay? So like, for example, just as an example, you have to be careful about quick commerce. Because 5 big players want to get into a market which has been dominated by 2.5 players or 3 players so far. That is not going to be an easy space. When that type of capital starts chasing the returns that the incumbents are making. So you have to be careful about some of these spaces where I think competition is intensifying, and there are some consumption sectors where competition is intensifying. So the tagline that I tell investors is, in India there is no dearth of TAM. TAM means total accessible market. But the winners will be the guys with the moats.
Market is probably going to outperform in quality over momentum. High floating stock, diversified ownership over concentrated ownership, and reasonable valuation over expensive valuation. Now, keeping these 3 parameters, it is fair to say that sectors like IT, pharma, consumer staple, FMCG, telecom, auto, cement, they provide more options to invest which will outperform the market on a risk-adjusted basis. There are sectors like defense, railway, capital goods and infrastructure, consumer durables, where we believe valuations are ahead of fundamentals. So go for quality over momentum, high floating stock over concentrated ownership, and reasonable valuations over expensive valuations to build your portfolio. And most importantly, while you're looking at this Samvat, don't look to invest on a 1-year basis, invest over 5-year, 10-year basis with moderated return expectations.
No doubt.
This Diwali, embrace the spirit of new beginnings.
Time for fresh opportunities,
Bold ambitions
and renewed dreams.
See the world through a brighter lens as you turn your efforts into profits.
Transform your goals into wealth.
And spark joy in your journey towards happiness.
1, 2, 3, 4.
This festive season,
Let money work for you.
and light up your future with prosperity.
let's celebrate growth, wealth, and true happiness. Profit Wali Diwali.
NDTV Profit's first Diwali.
From our home to yours.
Maybe we are being pushed involuntarily into the trade environment. Trump, who's leading perhaps slightly in the US polls, suggests that he'll put tariffs in place. The world that was globalizing post, say, 2000 has suddenly taken a backward step. So are we all going to beggar our neighbor policy that brought the world to ruin in the 1930s?
There is certainly a bit of movement in that direction. We have seen, both the United States and China impose import duties on each other.
I want to take you back to the 50s. We had a choice that time between two prime ministers, perhaps. Nehru on one hand, Sardar Vallabhbhai Patel on the other hand. Would economic history would have been different if the roles had been switched and Vallabhbhai Patel had become prime minister?
Oh, very, very much so.
Well, back with the special Muhurat trading session. Just keep in mind that the markets are doing okay for themselves. They're not quite sulking as yet. Let's see if the juice comes off in the last half an hour or thereabouts. But M&M and the likes are keeping the markets higher, which is actually a very good thing. Remember, we've got forces at the BSE, NSE, at dealing rooms, and I think we'll be joined by Agam in just moments from now because we'll be in conversation with Ramesh Damani. Post that, a very special voice, Mr. Anand Rati, would be joining in to give us his wisdom on what to do in such a scenario. So, very special voices lined up. We'll get to them in just a minute. Can we just pull up the BSE 500 and show the list of winners and losers for a moment before we get to our guests, just to keep marked what stocks are doing, even though this is a truncated session. So the BSE 500 winners and losers will come up on your screen in just a moment, just to mark that before we get across. Look at that. Some gains there, 7% for Philips Carbon Black, Brigade Enterprises, Star Cement, etc. And Rainbow Medical has come off. But let's cut across to Agam, who I believe has gotten Ramesh Damani. And the beauty about being at the Bombay Stock Exchanges are sort of all the auspicious things that happen. You get to speak to some veteran investors. There is Ramesh Damani, there is Mr. Kisan Choksi, and a few others. And the feeling out there is absolutely festive. I wonder if Ashok Damani is there today with him or not, because last time I remember we got both Ramesh and his son Ashok, and both of them are very differentiated styles of investing, and they were talking about the same. So it could be interesting if that happens or not. But interesting. What I'm really interested to know about from Ramesh is that he's bet on PSUs, made a lot of money, and then booked some of the monies there too. Will he now, at this stage, be betting on some of the PSU names yet again?
Here a few weeks ago, he did actually say that he likes the OMC, oil and gas PSU names, and he feels like there could be some value there. But we got to understand if he still holds that view, because it's not been easy in the last few months.
And we also have to plug this great input that we have with Ramesh Damani. He's our US election tracker exclusively on NDTV Profit. He does a fantastic show called Icons, where he speaks to incredible people, and of course is speaking with our very own Agam Vakil right now. Yes, Agam?
Well, thanks so much for that. It's always a privilege for me to be able to have a conversation with Mr. Damani every single year in the Bombay Stock Exchange. Mr. Damani, a happy Diwali to you, and thank you so much for joining in. Mr. Damani, it's been well over 10 Samvats of a proper bull run. At what part of the bull run are we at this point in time?
Yeah, first, thank you very much for your kind wishes and your very kind words. It's always a pleasure to come and talk to your public airwaves to the investing public. So let me allow me to wish them also a very healthy and a very prosperous Diwali. Yeah. Because that's what we hear about. The stock market is one place you all come to earn money. Right. There's no other thing. Yeah. So it's very good out there. Where are we in the bull run? Look, there is some evidence to suggest that the bull run is tiring because the market was not responding to good news. New highs were going low. There's general feeling of drift in the market. But I think it seems more and more like a classic consolidation within a bull market. Right. So I think we might be sideways in terms of time and price for another few months. Before January, a new outlook, new flows will start looking up at the market. Right. So my feeling is that the bull market is still alive, but it will take some pause. Say in the soft drink industry, the pause that refreshes. Right. So probably it's the pause that refreshes.
So that leads me to my next question. Over the last 15 years, and after maybe a decade and a half, we've seen resurgence in real estate. A lot of PSU sectors, subsectors are doing very well. Of course, since then, we've seen a little bit of a correction in the markets and they've come off. Here on, what are the leaders that you anticipate that could perhaps, take these markets forward from here on?
Well, typically, I'm a very firm belief that once leadership is established in the bull market, they will continue to lead in the bull market. So I would not be shocked if PSUs made a comeback, and maybe not the old PSUs, but some new, the wide plethora of choices in PSUs. So maybe some other of them will pick up steam out there. So while some of them seem at least overvalued to me for the short run, I'm not sure they're done for the course of the bull market. Right. In the new themes that you ask for, I've said repeatedly, we're very bullish on the public digital infrastructure space because what India is being transformed in front of our eyes is a digital country. When you go to the airport, the biometric check that lets you straight in, the KYC is all electronic, the ONDC is revolutionizing e-commerce in India. So a lot of companies that are now participating in that area. Right. And I feel they will do well over the next 5 years, 10 years. So don't look at it from a next 1 year point of view, but over 5 years, you'll see a complete transformed digital India, and it'll be on the basis of this infrastructure companies. Right. So that will be one theme I would look for over the next few years, not necessarily for the next 6 months or 1 year.
Absolutely.
The other thing is that surprised me myself because I've never been a big votary of the pharma sector. But if you take out the headline companies in India, the Dr. Reddy's and the DVs, which are doing very well and are fabulous companies, but look at the mid-cap space, there's, for the first time, intellectual property being developed by these mid-cap companies. Right. For example, vaccines, antibiotics, anti-obesity drugs, which is very unique, in my opinion, for Indian companies to do. Because generally doing contract manufacturing, reverse engineering, those kind of skills. So these companies are pushing the envelope and doing intellectual property, and they're fairly modest market cap. Right. So I think again, you take a leap and say, I want to be in this company for 3 to 5 years. I think you could do probably well in them.
Mr. Damani, given the fact that we are in a bull run, we've been in a virtuous cycle where there's plenty of liquidity. But investors usually find it very challenging to hold on to cash for relatively longer periods of time. At this point in time, a lot of these investors have booked profits, and they're sitting on a lot of cash, but they're not comfortable placing their bets just yet, maybe because of valuations. What would your suggestion be to that?
I'm in the same group. Right. The first time I've been almost fully invested all the last 4 years. For the first time I've taken some money off the table because I was feeling there was some froth building up in the market. The IPO market had become red hot, which is generally a sign of the market in the secondary market cooling off. But as you also correctly pointed out, I'm very uncomfortable holding the cash. Yeah. I want to deploy it again. And I'm finding, more challenging valuations. So I'm looking around, waiting my time. Generally, it's been a bad idea. I mean, there's a saying, of course, that cash is king. Right. But generally, it's been a bad idea. If you've been in the Indian markets as long as I've been, I came in, if you remember, when the index was 800. Today, it's closer to 80,000. Yeah. So it didn't pay to be in cash. It paid to be invested in equities. Right. And equities give you dividend. And you have to learn as an investor to ride out the volatility. Right. So while I am sitting on a little bit of cash, I'm not necessarily the most comfortable man around. And I'm looking with both eyes, ears, and hands open for new investment ideas.
And in the meantime, it's still equity, or are there other avenues in which you want to park your cash while you decide?
That's an easy answer for me. I'm always either in equity or just some amount of cash. All right. The real estate, the jewelry, whatever the family buys is not included in my wealth. Right. My jewelry is my demat account. And I firmly believe that the best equity class in India for the last 30 years and for the next 10 years is probably going to be equity.
Mr. Damani, the way we invest now is changing because of technology, because of decision making becoming a lot faster. We have computers, do the basic research for us, and then that's when we come to. What difference do you find between you and perhaps the next few generations in terms of the way they carry out decisions?
I think a lot of people are concerned with quick money.
Right.
And in my humble opinion, that's the saddest part of the market, because if you make a $20 profit in a bull market, you sometimes don't understand the stocks go up 10x or 20x. So it's a pretty stupid way to play it. I mean, you might be happy with 20% gain, go out, party with your friends, buy a dress, take a holiday. But sometimes you miss on life-changing opportunities to make wealth, which is what a bull market presents to you.
Right.
So my advice to people is, while you might want to trade because that is a bit more fun, a large percentage of investment, which is long-term investing in compounding. You want to compound that portfolio at 21, 22% over your lifetime of investment.
Right.
And if you do that, you'll be very, very rich at the end of the period. Trust me, do the compounding math, it will tell you out there.
Compounding does matter. Wisdom, ideas, you get it all when you hear Mr. Ramesh Damani, and I think we get all of that when we speak to Mr. Anand Rati as well, founder and chairman of Anand Rati. Mr. Rati, thank you so much for waiting patiently while we were having that other conversation. But from all of us out here at the NDTV Profit team, wishing you and your family a very happy Diwali and a prosperous New Year, sir.
Thank you, and I wish you, your entire team, and all your viewers they had a great year last year, and I hope a great year ahead too. I wish them all the best for the coming year too.
Thank you, sir. Do you reckon that markets will hold out well in the new Samvat? Because there are a lot of concerns that people are citing, which may take the markets lower from where they are right now. Are you constructive or are you a bit skeptical?
I am not skeptical at all. I am definitely positive. Given the correction which has already taken place, which is we have grown 25% in spite after considering these corrections. But my belief is that, as the economy is doing very well, if you see all the numbers of economy coming, if you're talking of 7% growth, declining inflation rates, declining interest rates expected. So if you put all these factors together, I am not at all skeptical about the markets. I think markets will do well. May not be as well as than last year, but it will continue to be in the positive trajectory as such. Volatility is a part of this market. I think that we don't rule out. But in my view, markets are poised to do well. In view, because the entire, at the end of the market reflects the economic growth. And economic growth really, is seen through the corporate results. So my belief is that market, one need not be skeptical at this point of time.
Ji, hi, happy Diwali. It's Amina. Everyone around market participants have been very excited about anything that's capital market play. They've been equally excited about your company as well. And I think your industry has become a wealth creator even for retail or investors at large. How is business looking, and do you feel like with us moving into a period when the markets will be volatile, business will continue to look good, and hence your industry or your sector still remains a good investment opportunity?
It would be because, let's see this way that people are now getting more and more educated about the asset allocation process and which asset class can really give you the higher returns in longer term. I think, all the people we are talking, the people who have wealth, they all look at long term, and that's what we also advise them. Look at the long term. If you're not a trader, you are investing for 3 years, 5 years, 10 years. And looking from that angle, I think our view on the asset class as equity as an asset class is today the best and likely to do very well. And therefore, the entire wealth, the cake size is increasing. I believe that there is dearth of good advisors in the wealth side, because the wealth is, go to any nook and corner of the country. You find a lot of wealth with people. And they're looking, earlier used to go into real estate or gold. Now, those are not as attractive, and perhaps real estate, of course, has picked up in the last 1-2 years. But before that, it has been so dull. So I think people have realized that yes, for good return, besides return, I think it's the liquidity, which also is provided by this market. So those who are long-termists, they are not worried about this volatility of changes. But yes, traders or took a, in positions in the derivatives, they definitely need to be worried about it.
Mr. Rati, pleasure speaking with you. Tamanna here, and of course, a very happy Diwali to you. Just trying to understand that right now, the question is what is happening with consumption? Is the economy slowing down? FIIs are moving out. None of this is concerning you?
You see, I think there's two aspects you're talking. One is FI is moving out. I think we have seen that in spite of such moving out, because as I said, the local money is increasing at a very fast pace. And I think that's a good sign that retail investors or other investors, wealthy investors, have realized that it's a long-term view which is to be taken. And that's why they are getting into this market. So that FI doesn't worry me at all. On the other hand, my own anticipation would be in long term, FI's money is bound to come because the saying is money chases earnings. And earnings are dependent on the economic growth of any country. So if you look at the macro side, I think obviously Indian economy is today the world's best economy. Why is it happening is because, today we are an island out of the entire world. Where our economy is doing so well, other economies are not doing well, or they're talking of recession problems. We are not having those problems. As a result, people sitting outside sometimes are skeptical about valuations. But my belief is that, it's a question of time. We have seen FIs going out in a big way and then come back in a big way again. So my belief is that money will always come from outside, but internal money itself is so high. I think because of this, so much of selling of FIs, things have, markets have really corrected. And I think these sort of corrections are healthy corrections. Look at any year. In every year, the markets, high and low, could be as different as 10 to 15%.
Yeah.
And this is, so one should not, a long-term investor, we always advise not to worry. तमन्ना ये होनी चाहिए कि लॉन्ग टर्म में बने रहे.
बिल्कुल यही तमन्ना है राठी जी. लेकिन आपसे बात करने का मौका मिला है तो I must ask, what is exciting Anand Rati right now in the markets? What company or what sector is something that you are excited about?
You see, I don't talk about companies at all. And sectors, again, my belief is that rather than looking at sectors, as you rightly said, if you are a good stock picker, you have to look at the stock in any sector. And in a growing economy, every sector, there'll be some good performers, some poor performers. Okay. But generally, if you ask me about this, I think I'm bullish about banking, NBFC, FMCG, pharma. I think these sectors, infra, but then I think the choice has to be not on the sector, but the stock in a sector, which I'm sure you have a lot of knowledge and you get a lot of knowledgeable people to talk about individual stocks.
Yes, always tough, but you're right. It's a stock picker's market, and if you want to create significant wealth, you want to spend some time understanding the company you want to invest in or betting big on. But sectorally, Rati ji is very confident on the BFSI space. We've got a few more minutes to go, and now 10 minutes to go, and we're sub 24,300 on the Nifty. That's what Neeraj was also saying, that we may start higher, but finally close the day slightly lower and off the day's high point. And that's pretty much where we're at. 24,295 is what we have on the Nifty. 12 more minutes to go. Breath has also gotten a little worse. The Nifty 50 is seen about 10 counters now lower, as opposed to 3 that were lower when the markets opened up for trade at 6 p.m. But we did Shagun stocks with Varsha a few minutes ago, and now we've got Richa, who's standing by as well with the whole list of counters that Brokerage is like. Richa, sorry, I'm not used to this evening setup, but happy Diwali, and tell us what you have. You've been tracking and talking to brokers. What are they picking and betting on this Samvat?
Right, happy Diwali, Samina. So I'll start with Kush Bora calls. Number one is Emphasis. Well, the first target for the stock is 3,355, implying an upside of around 15%. The second target over here that he's given is 3,600. 2,760 rupees. Now this implies an upside of around 26%. The stop loss here is 2,750. Now talking about the stocks, well, talking about the stock performance, the stock has given 24% return in last 6 months and 36% return in last 1 year. Another stock which he has recommended is Skipper with the first target of 616 and the second target of 710. Stop loss over here is 454 rupees. Now talking about the stock performance, well, this stock has done really well, given about 51% return is in last 6 months and 142% in last 1 year, and another 30% is what Kush Bora expects from here going on based on the second target. Third one on my list is HDFC Life, given by Soni Patnaik. She recommends to buy the stock on decline till around 680 rupees. First target is 850, second target is 950. Stop loss over here is 635 rupees. Now the stock has given around 23% return in last 6 months and 17% return in last 1 year. Last one on my list is Bharat Electronics, recommended by Vaishali Parekh. The first target, actually she's given only one target at about 350 rupees, implying an upside of 22%. Stop loss given over here is 250 rupees, and the stock performance is 21% in last 6 months and 113% in last 1 year.
Okay, thank you for that, Rucha, and wish you a very, very happy Diwali. Kush is here. Some of his calls were on that Shagun stocks list. Anything you want to add, Kush, after looking at the session today?
You know, interestingly, a couple of other stocks that I mentioned, were HDFC Bank and Reliance. Now, no matter how cautious my view is on the markets, I think from a year's perspective, Reliance has actually come to a point where it's starting to look, very interesting, at least from a medium-term perspective. Could see some more pressure because of the kind of heavy volume backed move that we've seen recently, but it's starting to consolidate. I take heart from that fact. And HDFC Bank, we've spoken time and again that for the last 4 years or so, it's hit this 1700, 1750 zone about 10 times, about a little more than that, and then given way. For now, at least, for the good part of this month, it's holding above that 1700 mark, consolidating with some positive bias. So I think there's a big catch-up trade that has to come up on, HDFC Bank. So this too could, play out, and 1875, 2000 other levels to look at on the upside. So along with, Emphasis, Skipper, and RVNL that we've already discussed, I think from the large cap names, Reliance Industries and HDFC Bank, the two big ones should be kept on the radar and perhaps can be considered for buying from a medium-term perspective as well.
Kush, there are a couple of stocks in the broader market universe that are actually not doing too badly today. Maybe the volumes may not be too supportive, but nevertheless, and I know we've talked about some of them extensively in the last few months, but look at Vodafone. I don't know what's happening there, but the counter is up 5%. Brigade is up nearly 6.5%, 7%, and Poly Medicure is up 11%. You've also got NCC, RBL Bank, M&M that are upwards of 5%. Anything about these 5-6 names that I've mentioned that could be a good trade buy today, maybe sell Monday?
We perhaps could have done that with the Poly Medicure yesterday because that was our pick in the closing, in the closing show. In fact, about 2700 or perhaps even earlier than that, was when we recommended for the first time. Yesterday was like an upgrade. 3200 was the second target. We're getting there on the back of good volumes. Now the stock is entering overheated territories. So now is the time to take some money off the table. Good momentum, so don't book it entirely. But about 50% is a good idea to, book and perhaps wait for any kind of dip in Poly Medicure. Nothing meaningful has happened for me to change my view on Vodafone. The downturn has been staggering, and nothing to say that any kind of meaningful turnaround might come about. I am okay to miss a 20%, 30% kind of a rally, before it crosses its 200-day moving average around 10.5, and then perhaps consider if at all a trade has to be made. So for me, Poly Medicure continues to remain a buy, albeit on dips now, and M&M. That's one stock from the auto space that is consolidating around that 2600, 2650 mark, has made a good base, could see a rebound from here. So that's one stock that you want to consider from the auto space.
Okay. Thanks for that, Kush. Well, let's get into two more voices. Firstly, Abhay Agarwal, Managing Director, Piper Serica, with us, as is Deven Choksi, Managing Director of DR Choksi Investment Managers. Gentlemen, both of you, thanks so much for joining in. And to you and yours, from all of us, a very happy Diwali and Saal Mubarak. Abhay, you are probably not so constructive, but today's the day wherein you still shed all of those inhibitions and talk about what looks good. So let's try and talk about what looks good amidst a scenario which may not be the best.
Yeah, Neeraj, first of all, very happy Diwali to you and the viewers, and wishing everybody a great Samvat. Yeah, you're right. I think based on the earnings and based on the cyclical slowdown that we are in, I think the earnings outlook will keep getting adjusted downwards. So in that scenario, it is difficult right now to see what will drive the Nifty index level over the next 6 to 12 months. So what will happen then is that to make returns, the equity investors will need to find those themes and those stocks, that will outperform in terms of earning growth the broader markets. And I think that's where the good news is, while the overall market, the Nifty itself, the large caps may go sideways, devoid of any earnings good news or earnings momentum. There are, in the broader market, there are opportunities that exist. There are a lot of new companies that have got listed over the last couple of years, Neeraj, that have now started to find feet and in very exciting sectors that we believe are, potentially multi-baggers. And there is domestic CDMO, the space that we talked about, companies like Windlass and Acoms. And these are not my buy recommendation, I'm just talking about sectors. Then there are companies that are catering to semiconductors, complex electronics, companies that are focused on exports. And I think there will be a big government thrust to exports. There will be a big government thrust to, replacing imports from other countries, especially neighboring countries. So I think in that positive macro environment, these are mid-cap, small-cap companies that will become multi-baggers. We are very confident of that. I think the investors would just have to do the hard work of finding them and staying with them through the market volatility.
Okay, that's Devin Choksi also with us. Very, very happy Diwali to you, Devin Bhai. And thank you so much for joining us on this, auspicious day. What do you think is going to be the turnaround story in the next 3 to 4 months? Is it going to come from banks? Is it auto? And would you stay away from IT?
Yeah, at the outset, I think wish you happy Diwali to all of you. And my prayers to God for health, happiness and prosperity for every one of you and all your viewers. Well, I think what could change the scenario? I think that's a big question. And in my understanding, I think this market is giving you a perfect answer. Already we are seeing, I think, a price correction of a sharper degree in a span of less than a month. And at the same time, I think as the habit of the market is, it will probably, I think, try and get into some kind of a time correction. So if my reading is right, the third quarter and the fourth quarter, both these quarters are going to be, I think, involving some amount of time correction for individual stocks. And within that, probably I think some of the large cap stocks would start to strengthen first and then start going up in a gradual manner. So that is where I think our understanding on the subject is. Now, what could be the trigger point here? Well, I think there can't be any 1 or 2 trigger points. I think it will have to be coming along with. Maybe, I think the first point that one is looking at, the interest rate scenario will have to become softened. I think currently the rate of interest, I think at which they are, maybe the confidence level to the corporate, I think if it is required to be given higher, then probably I think the higher confidence would come only when I think the rate of interest comes down. And that's what we are expecting in subsequent period of time with the good monsoon around. The demand itself, I think, is suggesting it's a good demand going forward as well. So we think that I think it is a demand revival, and at the same time government's expenditure on the infrastructure, which is expected to pick up in the third and fourth quarter, could be the catalyst, I think, in generating a higher amount of order book for the companies in the third and the fourth quarter. So it's going to be a buy opportunity in my understanding when the correction takes place in the market.
Abhay, hi, happy Diwali. It's Samina. So while I know we I guess we resonate with the fact that the global setup looks tough, and the fact remains that we have borrowed returns from the future. So any sort of correction, some may believe, is actually healthy and well timed. When we look at it structurally, no one's arguing that the India story is still very intact. But post earnings season, which largely most people agree, barring a few sectors, might have been a disappointment. But anything from the 57 sector universe that we've seen, there must be something you like, right? Something where you see value, where you see the risk reward is in favor of the investor.
Yeah, Samina, of course, we are very bullish on the long-term, medium to long-term prospects of India as an economy, as a country, and as a place for equity investors to be. It's just that in the short term, we are worried about the cyclical downturn, which is par for the course. When economies grow like this, they take a pause, they form a base, and then they grow from there. So that's where we are. I'm not so worried about the medium and long term. And there are opportunities, as you said. We are very constructive on the entire insurance space, health, life, non-life. I think, that is a space that has seen sideways movement of price. As a result, earnings have grown, valuations have fallen, and are now quite attractive for the growth that is there in front of you. So insurance as a space looks very attractive to us. Pharma as a space looks very attractive to us. I think some of the Indian companies have phenomenal product pipelines which analysts are not looking at carefully. And when these, like what happened with Cipla yesterday, when these products come into the market, they will be game changers for the pharma industry. We are very bullish or starting to get bullish on the entire metal space, because if China reflates, it will lead to re-rating of metals which are trading at abysmal levels still because of China dumping. So I think there are sectors like these where there is great opportunity for astute investors to make their picks.
So we have the session has shut, and I would say not half bad. Nifty didn't quite make it to 24,000.
I want to see the FI sell numbers today.
I think that's why we managed to close
43 sessions, right? What did he say last day?
23.
Yeah, there are only that many days in October.
It
43 sessions. It felt, but 23, but feels like 43.
43. So I want to see it today.
So FIs have
But do you think that
taken
no
a break
FI
from
selling? It is Friday, and Europe might be still open for all you know.
Oh God!
And Wall Street maybe.
I think the point being, maybe that's what's responsible for the uptick that we're seeing.
Missing FIs.
So yeah, missing FIs who are like taking a break, maybe Diwali break from dumping equity. But Monday onwards, you might see that pressure coming in. All right, let's see how we've closed, and let's pull up the Nifty heat map for you. Auto is the story of this session, and let's be honest, this session is more about symbolism rather than any big move. But M&M, they're doing really well. ONGC as well, some of that auto pack doing well. On the broader markets, Poly Medicure has been the star of the session, as is Piramal Pharma, RBL Bank, Brigade, Vodafone seeing that big pump up, and Motilal Oswal jumping about 4% at the closing session. Abhay Agarwal, just would you look at auto more closely in light of the numbers that have come in, the sales numbers? Do you think that could be one theme, one story for the start of the next week? You talked about metals, which is also very important because we'll have more information coming in on what China is doing to boost their economy.
Yeah, I think on autos, we have been fairly negative for last 2 quarters. And Tamanna, that is because the channel inventories continue to pile up. So while auto companies have shown good sales, they have not translated into sales at retail level. The last check that we did last week, we found inventory levels to be above 80 days, which is extraordinarily high. I have never seen in 30 years inventory levels of 80 days plus, even in the COVID times. So there is a structural problem. Buying has slowed down tremendously. So I will not be surprised November, December, January, we see plant shutdowns for 3, 4, 5 days, which used to happen earlier. Mahindra, Maruti used to take plant shutdowns to cut inventory. I think we are headed there. So I will wait for at least a quarter more of retail sales picking up, inventory getting cleaned before, we start looking at buying anything in the auto space.
Okay. Before buying in the auto space. Okay, Abhay, we'll take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time, and have a great festive season. Devin, 30-second answer. You've told us what you will buy. What is it that you will avoid?
Yeah, it's a big question. I think the valuations, when they are expensive, I think that's an avoid. Now, whether there is a sector or a company, I think it would be more of a company-specific answer. That I think where the valuations are expensive, I think I would be very, very careful about adding them into portfolio, because those stocks can really underperform for a long period of time. We remain constructive about, I think, the possibilities of commodities, and metal as a commodity, they remain, I think, relatively a good opportunity probably in next 3 months or 6 months from now.
Right. Devin, that's of course what you're avoiding, but two quick sectors, if I can get perspective from you on, is IT and pharma. And the reason I ask about these two sectors is because their outlook is largely driven by what happens outside this country. Are you constructive, or you'd wait it out before you dig into some of these IT pharma names?
So within IT, engineering R&D companies, they look relatively more promising, more reassuring, largely because of the fact that the verticals in which they are operating, they are probably, I think, some of the best customers that they are catering to. So we remain constructive about the engineering R&D space within the mid-tier IT companies. Not so much confident about the frontline IT companies, though we believe the worst is over for them. As far as the pharma is concerned, yes, I think the look for those companies where the complex generics, the specialty generics are the ones I think which are probably driving business and the growth for likes of Cipla, Sun Pharma and Dr. Reddy's. And similarly, I think the CDMO and the API business for likes of Divi's and Laurus, they look relatively more appealing now than before. So certainly I think one can look around for these kind of companies at a corrected price level to buy them into the portfolio.
Okay, one last call from Kush. If you have any more left to give, Kush, for Monday's trade.
Plenty more.
That's the spirit.
कितना पैसा है भाई आपके पास?
पैसे तो आपको लगाना ना, हमें तो कॉल देना है.
Here's the ideas.
No. I think amongst the railway names, some of the names that we've already mentioned have started to do well. RVNL was one such stock, but if you see the jump up on Texmaco Rail, Texmaco Infra, phenomenal, and it's a sustained move over the last 8-10 sessions, while the volumes are thin and as you would expect on the way up, because the market is a little skeptical right now. But I think some of these names are starting to do well. So I'll have JWL, Jupiter Wagons, Texmaco Infra, RVNL on my radar. RVNL we've already discussed extensively. Texmaco Rail is one more stock that I want to put on the viewers' radar. On the downside, the support for this one comes in at 110, so that should act as your stop loss, and this is of course for Monday and the days to follow. And on the upside, you're looking at a 122 and a 130 as your target positionally. So one more addition to the railway pack.
I know that this sounds rather not so relevant because the mood is so local and so festive, but it seems like the world has started off November on a positive note. So you've had a good day of trade across Europe. I know Neeraj was missing the FIs a few minutes ago, but Europe is looking healthy. They've added missing us.
I'm happy they are missing.
1% higher across Europe. Oil and gas stocks are looking good. UK gilt yields have declined. US jobs report is not bad. So all in all, I think November has also started off better than what October did, and for us, of course, even more significant because it starts a new year for us this Diwali. Well, but of course, my colleague Harsh Saitha is joined by NSE MD and CEO Ashish Kumar Chauhan. Let's go across and get a mood check from him too.
Or without studying about derivatives. That's where the regulators and the government have decided to create curbs, and that's what this is just the first step, and
such a pleasure.
Series of steps are going to now come into play, and so it's early days. There has not been much impact yet, but I think given the 6-7 new additional steps that are going to come up over the next couple of months, there is going to be some large impact going forward on the derivatives volumes.
So how are you going to insulate yourself from that impact?
In fact, we think it's a correct framework that SEBI is trying to put by reducing the number of investors who can participate in this, because the small investors should not be losing money, and especially if they are not aware. And so that's why we welcome SEBI's move, and that's why we don't try to do any insulation at all.
Sure, absolutely. So I want to take a step back. It's the new year. Firstly, wishing you a very happy Diwali and a very, very prosperous new year to you and the entire team at NSE. What is it that you would advise the retail investor in this new year?
No, I would like to first wish happy Diwali and a prosperous new year to all viewers of NDTV Profit and NDTV Group.
Thank you so much.
The retail investors, as I always say, that they have to invest rather than trade. Many times newcomers, even the old people, they think buying in the morning and selling in the afternoon is considered investment. It is not. if you want to invest for 3 to 5 years at least. And if you are not good at that, or if you do not have time to study the companies and their workings and the way the international finance works and other things, you should invest through mutual funds or portfolio managers who are experts at managing. And that's why basically for me, I would request sincerely all the investors not to believe in tips, not to believe in WhatsApp, not to believe in videos that come to you. You might think that person is saying, but actually because of the artificial intelligence now, people are able to make the videos which look better than the actual videos. And that's where there is going to be huge amount of misinformation and disinformation that is going to explode in next few years, including the coming year, that I warn very sincerely all the investors to be very careful of believing in what you think, and that's why they should go to more trusted sources of information like NDTV Profit. So that there is a way to actually verify what is being told and why. And of course, don't trade in derivatives if you don't know about it.
Right. So the growth in clients has been robust over the last, at least pre-COVID onwards, or rather post-COVID onwards. Do you believe that the growth now at a higher base can continue? Is the traction there? Do you still believe there's interest and participation?
In fact, if you came here last Samvat end, that is last Diwali, we had around 8.4 crore unique customers. Today we have now 10.5 crore unique customers as of date, right? And so we have gone up by 25% on a very large base. I thought was a larger base. And so Indian stock markets have done phenomenally well over last 10 years since Mr. Modi took over. When he took over, I think India's market capitalization was somewhere close to 65 lakh crore. Today it is somewhere close to 450 lakh crore, which is 650% or 6.5 times, which in a way no other times have seen that kind of growth. And in terms of the number of investors, I think it has gone up from 1 crore to 10 crores or something even larger. And that is telling you that more Indians are becoming middle class. They have money to save. And some of that, of course, will go to real estate or fixed deposit. But some portion is coming to the stock markets due to young people earning much larger amounts compared to their parents. And that's why they are able to consume more, but they are also able to save more. And the stock markets have given good returns over last 10 years or even longer. I mean, if you take 30 years, again, there is no other asset class which has given that type of returns. If you had invested 1,000 rupees in Nifty in 95, after 29 years, you're now getting 25,000 plus the dividends you would have got every year. So it would be effectively 30,000 or something like that. So for me, the stock markets have done exceedingly well. But going forward, I think they're going to do probably even better, given the way India has a very good growth path and a momentum for next 20-30 years. What China was in 2004 in terms of its demographics, in terms of its takeoff. Today, India is in that stage, so like after 20 years. And so we have a very long new period of growth that is coming up. And India is in a right place, right time. And also technological orientation, which creates wealth. India is the only country which uses the technology the way we do. And that's where I think India has a great chance to become richer before it becomes older.
Well, this concludes our Diwali special edition. Thank you all for tuning in. And as we wrap, hear out Morgan Stanley's Ridham Desai, who spoke about India's growth slowdown as well as the impact of the US election on India, amongst other things. Listen in.
The biggest challenge in my view is that growth has slowed down. In fact, that's what's in my view afflicting the markets. A lot of people attribute this to the China stimulus, but really that's coincided with India's own kind of growth slowdown. And that I think is really what's hurting share prices more than the China stimulus. In fact, the China stimulus is done and dusted. It disappointed the market, and Chinese stocks have sold off since then, but India has not recovered. And this growth slowdown is down to, I think, three things. Okay, so the first is the Shraddh period, which shifted. So the year-on-year comparisons have got distorted. So that's the least important. It's behind us already. The second is the month of August, which had unusually strong showers, and that of course hurt demand and hurt output. That's also behind us. The third and most pertinent and lingering problem is government spending. So if you look at the first 5 months of this year, the fiscal deficit is tracking 3.4%. The budget was 4.9. Government spending is down 1.2% over last year. Government expenditure is 12% of GDP. It's very hard for the remaining 88% to overcome, when the remaining 88% is growing at 10-11%, to overcome 12% doing -1. And that's what we are seeing on the ground. People try to say it's urban slowdown, rural slowdown. It is plainly the lack of spending by the government. Now, the first quarter of this fiscal was attributed to the elections. So obviously during elections, spending slowed down. We lost the month of August to rains. Maybe September was partly affected by Shraddh. So hopefully the data improves in October. But clearly this is about government spend. Now here on this point, if the government has to go back to its fiscal target, and this is a really odd situation for India, because all of us who've been in India for a long time looking at government budgets, governments historically in this country have struggled to meet their fiscal targets. Usually they slip. Okay, we are actually in an inverse position right now, which is that we're going to actually beat our fiscal target. So we're going to have a deficit which is lower. So in order to get to 4.9%, I think if you do the math, the government spending for the remainder of this fiscal, which is starting October, has to be of the magnitude of 25% year on year. Okay, and if they manage to achieve that, the markets are in for a very big surprise on growth. Because I don't think the market is thinking in this fashion.
Got it.
Now, that is a spending capacity issue of the government, and maybe they don't do 25, maybe they do 20. But it's still a big jump from where we have been in the first half of this year. So I think this is what is ailing the market right now. And then of course, as we've been writing actually for 2 months, and we were discussing outside in the studio, for 2 months I've been saying, things are getting a little frothy. There's a bunching up of, IPOs. So that bunching up of IPOs is also taking some of the appetite for secondary market away. And that happens from time to time. Neither of these are structural issues.
Right.
We are still in a structural bull market. I think we are probably just slightly over the halfway mark, my guess. I don't have a science to prove it, but I think the earnings cycle is about the halfway mark. So the earnings cycle has another 3-4 years to go, and therefore stocks should have another 3 years to go. Stocks will anticipate the peak and peak before the earnings cycle. So we're not at the end of the bull market, but this is a typical bull market correction that it will take weak hands off the market, and the market will emerge much stronger after this. The other thing I think is that the mid cap and small cap stocks had gotten frothy in various parts, and some of those valuations were just not defensible. Or put another way, they were basically pointing to very tepid returns going forward. And they needed to correct for those returns to become better, or they would be destined for massive underperformance. I think we are getting the former rather than the latter, which is good. And new money could come into these stocks once they are done with their correction. But the SMID, part of the market was a bit frothy.
Got it. So, okay, so the next 12 months, right, from summer 2081 to 2082, we'll have a few things. We'll have a new US government, a new government for sure, or a new president for sure, let's put it that way, right, independent of whether it's Democrats or Republicans. It will have the full force of the first year of the third term of the NDA, and it will have probably a slower first half, if you will, if the slowdown that we're seeing currently continues. What will have the most potent impact on risk assets? I know we are looking at a 12-month period, but the impact could be front-ended. But just still asking this to you.
Yeah, so I didn't answer your first question, so it's good you asked it again, because we were discussing Samvat to Samvat. I got caught up with the short-term discussion. But I think it is largely domestic issues. Okay. So in large part, I don't think the US presidential election has much bearing on how India's growth outlook pans out on a one-year horizon, and therefore how share prices pan out. Except if, for some reason, the US stock markets go through a sizable correction. And the SPX is stretching. It's actually a much more stretch than the Nifty, I think.
Yeah.
So it's kind of overdue for a correction.
Despite growth being there.
Yeah, I mean, it's just about the momentum, right? So at some point in time, it will correct. Now, if it's a 10% correction, it is bound to bring a 6-7% correction in the Nifty. If it's a 20% correction, it will cause a deeper correction. Maybe it's only a 5% correction and we'll move on unscathed. I don't know that. My US strategist tends to be a lot more cautious about the SPX going from here, and clearly the forward returns on the SPX look less attractive than what the trailing returns were. So that, I think, is the only thing that bears on India. As such, who wins the presidential election may not have bearing on a 1-year basis. It may have bearing on a 3-4 year basis. And again, that depends on what the new president chooses to do. I don't take all of what is said in a campaign trail for every word for what's said, because it's not usually how policies pan out. So there may be a difference there. So we'll wait to see how policies pan out. There are a few things that either of them could end up doing that could damage global growth or could damage the US dollar and have repercussions on the world at large and therefore India. The other global factor is, in fact, two more global factors, is what happens in China. So I think the good news in China is that this policy action may have created a bit of a floor. And it's good news for India.
For Chinese stocks, you mean?
No, for India.
Yeah, but floor for Chinese stocks.
No, for the Chinese economy. Chinese stocks is irrelevant to this conversation.
Okay.
I mean, what Chinese stocks don't matter to India. What the SPX does matter.
Okay.
But Chinese stocks don't matter.
Don't matter. I thought people would say that EM as a basket is important and therefore. But okay, fine.
No.
Let's leave that out.
In my view, it's not important. But the Chinese economy should not sink because that will bring pain to the whole world. China will export its deflation to the rest of the world. 21% of our GDP is exports. We'll feel the pain very quickly.
Yeah.
So it's good that maybe a floor has been put. China may not have done enough to lift its economy out of deflation, but may have just done enough for now to not cause another round down. So that's good. The third factor is the Middle East and oil. Now, oil is less important for India than it used to be because our oil intensity of our GDP has declined by 60% over the last 10 years. So it's significantly less important, but it's not zero. It's still important. And therefore, if oil prices went up a lot in a very short time, it will bring pain to us. So these are the three, I think, well-discussed, well-discovered factors. Most of what will happen in India is what will most affect stock prices. And over there, I think the things to look forward to, one is how the government spending pans out, because it's been subpar so far, which we discussed. Second is the direct tax reforms, which were mentioned in the budget. The third is, and I feel very strongly about this, is that first time in India's history, the correction on direct taxes as a percent of GDP exceeds indirect taxes. Indirect taxes by their very nature are regressive. So you pay the same amount of tax on footwear that your driver will pay. But as a percentage of your respective incomes, it's a lot higher for the driver. So I'm just explaining what regressive means. And therefore, I think it is important to cut GST rates to stimulate the economy. In fact, it's a far more powerful way than continue to fuel government expenditure. Because government spending capacity gets maxed out at a certain stage, and the buoyancy in direct taxes is not going away because incomes are actually doing well. Okay, the narrative here is not about lack of income growth, and therefore, if you can transfer some of that to GST rates, it will do well for the economy going into the next summer. The challenge there, of course, is that now the states lose revenue straight away. Gone are the days when they could compensate this with sales tax. GST and land revenues are the only two sources of revenues for them, and therefore cutting GST rates means I am lowering my revenue potential, and therefore to get that cooperation from the states will be certainly challenging. But if at some point in time, and as the debates are going on, if the government can manage to get the GST Council to agree to rate cuts, it will be great for the economy. So I think we'll look to that. I think the other thing is that the government continues to spend on infrastructure in the range of 2.5 to 3% of GDP. So the execution of those projects matter. There is a very interesting development that is likely on the farm side. So we didn't have the farm laws, and that was a big disappointment for me. The farm laws held great promise for India's farm sector, which I reckon is one of the long-term risk factors for India. The fact that we have 20 crore farmers, which is 40% of our workforce, producing only 15% of our output, and very unproductive, is a big risk for the Indian economy, and you have to solve for it. The farm laws promised to solve for it, but are now on the back burner. If they come back the way the proposals are going around right now through fiscal incentives for state, I think it will be a rabbit out of the hat. I'd get very bullish. I would have to lift my long-term growth rates on India. Yeah. Okay. I think it would be the most bullish thing that has happened in a long time.
This Diwali, embrace the spirit of new beginnings.
A time for fresh opportunities.
Bold ambitions
and renewed dreams.
See the world through a brighter lens
as you turn your efforts into profits. Transform your goals into wealth.
And spark joy in your journey towards happiness.
1, 2, 3, 4.
This festive season,
let money work for you
and light up your future with prosperity. Let's celebrate growth.